Take 5 with Ryan and Sonu. Sonu, we've reached the halfway point of 2023. The best year for the S&P since 2019. The best year for the NASDAQ in more than 40 years. And the best year for the NASDAQ 100. Think the largest 100 tech companies. Best year ever the first 6 months at the midpoint. I think it would be an interesting discussion for the listeners is how in the world did this happen? How about you give a couple bullet points why we're having such an incredible year for investors? And I'll throw a couple, and by then we'll probably be 5 minutes done.
I may steal some of your thunder here and just borrow some of your work, basically saying, when stocks are down a lot, especially in a midterm year, odds are they're going to be up and up quite a bit the following year, right? You have that reversal. And then there's momentum, right? Once momentum gets going, we saw that in the first quarter. We saw that in April and May. We got a little bit of momentum. And this was after the SVB crisis, right? So I think that was a big deal for markets to get through that, for the economy to get through that, for everyone to realize that, that looked like a big deal at the time, the banking crisis, but we got over that. And that just shows how resilient the economy is. And I think that's translated to market strength.
You're exactly right. I mean, remember 6 months ago, right? Everyone felt like they were bearish. Everyone saw this recession coming, which you accurately, I'd have to say, said, no, the consumer is still strong. Housing's likely bottoming. Construction's bottoming. Manufacturing's bottoming. All these things saying, no, there might not be such a surefire recession. And fortunately, that's exactly what I think is playing out. But you think about also, what did lead this year? Well, we know, I just mentioned, best start ever for some of the largest tech names. What we started to see in June, though, Sonu, I think the realization in June, Sonu, when we saw that stronger jobs number, that, there's no recession coming. What happened in June? Things broadened out. Industrials are like at an all-time high as we speak, right? Tech and communications have done great, yes, but we're seeing a broadening out, more stocks participating. It's not just a couple going up.
It's not just 7 stocks or anything like that, right? Going up.
Exactly. I mean, you think about it, people said only a few were going up the whole time, and we would disagree, but we're not going to go there. What I am saying now is we're seeing things broadening out. That's one of the major themes we have here in the Carson Investor Research Team as we're going to release our mid-year outlook next week, actually, a broadening out. Final comment, Sonu, then back to you. We came into this year looking for 12 to 15% returns this year. People looked at us like we were crazy. Sitting here now, though, we don't want to give it away, but you still think, we're having some decent gains next year, right? I don't want to give it away as in our mid-year outlook comes out soon. Yes. So you still think the rest of this year looks pretty good?
Well, if we started the year, to your point, we started the year at 12 to 15%, and the market's up, including dividend 16, 17%. So if you stick to 12 to 15%, we, implicitly would be saying, okay, we think the market's going down. I don't think either of us are there. We think there will be more momentum ahead. You've written really nicely about how the fact that we could hit new highs later this year. So yeah, definitely for all of you listening, keep an eye out for the outlook that's coming. We are going to give you all an update as to where we think markets will be at the end of 6 months from now.
Yeah, you mentioned new highs. Again, the S&P 500 new highs is only about 6-7% away. Yeah. Industrials on a monthly basis just closed at an all-time high. Okay, we know tech communications have done well. What I think, so let's spend a minute on small caps. Small caps is an area that we do like. It was doing really well until the bank crisis in March. What do you think about small caps here for potential catch-up the rest of this year?
I'm going to do two, small and mid caps. Mid caps is usually like that forgotten asset class, and we have it in our models too. And we like mid and small to the matter, right? And people usually don't think about these asset classes when they think of the S&P 500. But yeah, no. Look, simply put, if the economy is doing well and we think it's resilient, like you said, the consumers remain strong because employment is strong, right? But we are seeing the supply side coming back too. We are seeing housing construction pick up, permit starts, things like that. We've written about it. And business investment is picking up too. So businesses are investing. If we are in the middle of a recession or if we are on the verge of one, businesses wouldn't be investing, right? So that's a sign of that businesses are also confident. We're seeing that in earnings estimates going to continue to go up. So I think that's all good for mid and small caps. I mean, those are the really cyclical parts of, the stock market and even the economy, really, small businesses.
Great points there. We are nearing the end of the latest Take 5. I'll leave you on this. When the S&P 500 is up more than 10% the first half of the year, but negative the year before, like we just were, the next 6 months do extremely well, well above average. But also, when you're up in the sweet spot between 12 and 15% on the S&P, like we just were, the next 6 months have been higher, Sonu, 10 out of 10 times. So lots of ways to look at this, but we've been bullish. We think this upward trend is alive and well, led by a stronger economy. We'll see everybody next time. Thank you.